Let's now bring in Professor Jeremy Siegel of the Wharton School, also a senior economist at Wisdom Tree. It's great to have you on a day like this. Welcome back.
Thank you, Scott. Happy to be here.
Will this be the so-called clearing event that people want it to be?
I think we all hope so, but honestly, I think maybe a better outcome. First of all, we have to find out the average level, and we certainly know. I remember when Goldman raised it from 10, which what they thought, to 15. That really kind of shocked the market. Now we're talking about 20 or maybe even 25. But I think the most important factor will be how he positions renegotiation. In other words, a willingness. I will enter a negotiation. This is my starting point. If you lower on our exports, I will consider lowering on your exports. I think that would be received very favorably. Now, of course, that is a process. But I think if we can tell by his language or his body language or how the other officials are going to be talking about potential reductions in response to a mutual lowering of tariffs, I think it will be taken well by the market. If he seems very rigid and at levels over 15%, I don't think it'll be taken well by the market.
How much damage do you think's already been done from the uncertainty? There are some who think that, you can get past this. There are others like Tony Pasquarello, Goldman Sachs, who say the game's changed in the market. And now it's all about the preservation of capital because of this uncertainty and what's going to happen, even with more certainty of tariffs that are going to be punitive.
Yes, because even if, we know, for instance, if there's 20%, we really don't know what kind of a reduction in GDP that will entail. And the ramifications are very strong. We already see a big decline in travel by foreigners into the United States. That hits the service sector. There may be some boycotts of U.S. goods. And, of course, the big wild card, Scott, as we all know, is the potential retaliation. And if he sounds rigid, and we hear tomorrow from the EU, Canada, and or Mexico, okay, now these are our tariffs, that is definitely going to be a negative shock for the market. So, there is definitely potential downside. Flexibility, negotiate. Listen, if we could all negotiate to a zero tariff level, at one point I remember Trump saying, well, maybe if everyone had zero, I could take that. That would be ideal, but it seems to be far away at this point.
The other point to make, I think, is that stocks have already, as you know, priced in a lot, right? We're down substantially already. What doesn't the market know at this point, do you think?
We aren't, Scott. Look, we had a 10%, bump because of Trump, and most of that's been eliminated now with a much tougher tariff stance than I think anyone certainly expected, in November and December. We're still, haven't settled on what this tax bill is going to be and how it's going to be passed. There's still a lot of negotiations there. So, the other favorable part of the Trump agenda is yet to be passed. And now what we've basically done is wiped out the Trump bump back to that pre-level. If he goes tough on tariffs and on that, I certainly see further downside.
Wow. On the idea of what happens to earnings and what we should be willing to pay for the earnings we may get in the future, if you look ahead to 2026, for example, Goldman Sachs is around $280. 20 on that, a 20 multiple is only 5,600. I don't think that's what people were expecting. And that's even if you believe the 280. That is the biggest wild card in all of this.
Yeah. I thought even before Trump was elected that the 2025 and 2026 were way too high. Just because we had, 15, 18% growth rates in 23, 24, people started extrapolating. Long-term growth with no negative factors such as tariffs is 7, 8, 9. So I was saying, people are saying 2%, 2.5% GDP. Gee, that's great. How do you get a 15% earnings boost out of that? And we all know right now the street is between 0 and 1% for this first quarter, which, of course, just ended a couple days ago. So, there's just no way I can see double-digit earnings growth coming out this year. I mean, next year, obviously, depends on, how far it goes down this year. I would say that really no one can accurately predict that.